my screen here, sir?
Yeah, and I'm sorry you had some difficulty joining us.
My apologies. Jeff and I are sitting here. We test the camera, microphone, everything's working. 1 minute before this started, I get the blue screen of death. I had to reboot the whole machine. So my apologies, but I've got some. This week in the charts, we'll use S&P, NASDAQ, Russell, we'll look at the market itself, and then we'll kind of look at what should be happening for next week.
Okay, I'm
Which
interested.
is what the weekend review is for, isn't it?
Yeah. And when you get a second, I would recommend you take a look at all the nice comments that have come in on the YouTube, but not right now. Just like Dan Tipton, you probably know. He's been saying some nice things about you. Pat was speculating you might spend some time in the pool instead of joining the thing on time today.
I was thinking about it during the reboot,
Yeah. All right, let's go ahead and talk about markets. Let's go.
All right, so welcome Omniacs and Metastockians, if you will, from across the globe. I guess that's what we'll call them. Thank you for inviting me. Metastock, as you know, is one of my absolute favorite. It is my favorite piece of software since I'm literally an 18-year-old kid. So I want to show you some magic that I've learned how to use Metastock. What I'm going to teach you today, very simple techniques that we know Wall Street looks at. And if Wall Street's looking at it, you need to be looking at those same techniques. So I'm going to go over a little bit about what happened this week and hopefully what will happen next week. Before we get started, please know that this is an extremely risky game. You can lose more than you've got in your trading accounts, literally. You can end up divorced when you have to ask your spouse for more money. Please know that this is a very risky game. Put your stops in first. Trading futures and options is not for everybody. If you understand the risks, let me show you the technical analysis behind what's going on. So we're looking at the E-mini S&P. It's the daily chart. And what I've been showing all week long is that the market is testing trend line resistance. So I'm going to darken in that trend line for you now so that you can see what I'm getting at. See this red trend line? Starts here at the all-time highs before Corona began, makes its way here, and then it's established. Once that trend line is established, it becomes resistance. The market drops from it, puts in a bull flag, which we looked at last week, and what I showed you in last week's recap was that this bull flag would create higher prices, and it's exactly what happened. The market went up all week long, basically just as we thought it would. But something interesting is happening now, and this red resistance line the market is running into right here. So it's going to have to get above this resistance line and stay above it, because what you'll see over the next few charts is that the street, Wall Street, is absolutely watching these things right now. So Wall Street sees that we're running into this resistance, but it's not only that resistance. If you look here, for a certain amount of time, this was keeping the market in check. So every time the market got near it, it fell back down. So it starts here, trend line becomes established on this day. Market goes down, hits that trend line, breaks, hits the trend line, breaks again, rallies all the way back to that trend line, and what's it do? Connects to this major trend line, and the market breaks once again, as you'd expect it to do, came right down. So resistance, trend line resistance, I assure you Wall Street looks at this. It might seem simple, but it is trend line resistance that's very powerful, because algorithms are built on the information that you're looking at, on these charts. So they are using this information, whether they put it in an algorithm as a digital form, and so you're looking at a digital format when it's an algorithm, but it's the exact same thing here. They're just looking at it, and they're just looking at it in this form. They're looking at the numbers. Okay, so you can look at all the numbers each day, and it's the same thing that they assure you. So we know how to spot algorithms and what they're looking at by looking at simple technical analysis. So what happens next? The market drops at this line, heads down, right? Comes all the way down to here, makes the bull flag, heads back up, and then look what happens next. It really does work, analysis, more than you might ever imagine if used properly. So here, look at this trend line, which got established down here, worked its way to here. It held when the bottom of the flagpole hit. It held a few times in here. And now it's been, since we've gotten underneath that red line, it's been tested and failed at. And you've got another conjunction right here. Same as the conjunction that we had here. So that's simple, but it's absolute analysis that the street will be looking at. What's happened today, and it actually cost us OmniX today, we tried to sell into this resistance, but as you can see with this daily bar right here, I'll blow it up a little bit, we're actually above that resistance line on the close this afternoon on Friday. So cost us OmniX, sorry guys, we tried to sell it and it didn't work, but that's where we are now. And if you ask me, that's fantastic. It's what we were hoping for, that we would actually get above this resistance and keep moving forward. Another thing that's happening on this very same chart is that this week, the Golden Cross threat looks like it's going to take place. That's when the 50-bar moving average moves above the 200. Right now, or at least for the last few months, it's been the other way around. But right here in this circle, you're starting to get what the street will refer to as a golden cross. And if we stay above this resistance, that golden cross will take place. It will go in the algorithms and the street will react to it. So that's what's happened so far this week in the E-mini S&P. But let's look at the E-mini S&P, NASDAQ, Russell. Let's look at the gamut so that we can see how they're behaving. So next we'll look at...
Before we move on, Oscar.
You have a question?
We do have one in YouTube. S wants to know why didn't you draw the bottom trend line from the bottom in March? In other words, why did you start?
There is another trend line there, but it's not parallel to this one. So he's referring to this trend line. And yes, I had it there, but for the purpose of this picture, I didn't bother to show it. This is where it went. And once again, it's in conjunction with everything else right now. So that is a good trend line, but this one's more valid because it's got more points and it's parallel to the top one. So I use this as a parallel channel, but yes, this is a very valid trend line. Does need to be put in and does exist. I removed it simply for this video.
Perfect. Thank you for addressing that. Go ahead. Let's go ahead and look at some other charts.
All right, let's open up another. And this will be your NASDAQ, what happened this week. And of course, we're doing a weekly recap, so that's important. NASDAQ barely stalled even for one day this week. Barely stalled for a day. It went straight up. We had a one-day pullback, straight up again. But what's it doing? Testing resistance. So right now, S&P, NASDAQ, two major markets, both testing strong, solid resistance up here. Now, you cannot say it's going to work until it does, but it usually does, right? The resistance usually will push the market back down. We cannot get short until that actually happens. I attempted that today when we got towards that trend line. It didn't work. We'll see what happens over the weekend, Sunday night through Monday. But what we're looking at right now is the market testing all-time highs and major resistance lines. Now, this is a parallel channel, which is why it's not right at the low here, because that would unparallel the channel. And I like channels to be parallel, and I think the market does as well. So I'm leaving that as a parallel channel, just in case that question came up again, Jeff.
Okay.
So of course you would actually connect another line here if you're doing analysis, and that would be valid as well. But we're so far above it right now, there's almost no need to keep it in place. So we are testing resistance. The market looks absolutely strong. That S&P chart I showed you had major resistance on it Tuesday, Wednesday, and Thursday. And on Friday, the market peaked its head above. And look at this. So did NASDAQ. Look at that if you blow it up. NASDAQ peaked its head above that too. So go $9 trillion stimulus, because so far it's keeping these markets moving higher. Now, there is one that's having a little more trouble, and that would be your Russell. Oh, I'm sorry. I have to go to open to make that happen. And your Russell 2000, once again, bouncing off of a major parallel support line. So I kid you not, the 200-bar moving average and parallel or support resistance lines seems to be what the street is honing in on this week. so be it. We know how to hone in. We know how to hone in on that same stuff as we're doing right now. So if you'll note, we have a trend line here. It almost holds. It almost gets hit here, but it doesn't quite get hit. Same thing here. And now we're testing, got to the 50-ball moving average, held at the low today, rallied back into this parallel channel. And I like when markets test a line and go back into the channel because I know the street is watching that. But this one is solidly underneath the 200-ball moving average. So there is a difference here. The 200-ball moving average, there was a failure at it here. And if you'll note, you got to the exact high of that trend line, failed at the 200-ball moving average. Then it failed again here when the market tried to get above. Then failed again here. So, you know, the market isn't just running away in the Russell like it is in the NASDAQ. And don't forget, NASDAQ does have Amazon, and 90% of the planet is home buying stuff on Amazon. You know what I mean? So, of course, that's going to continue to go crazy. Apple, it seems that everyone who got an extra $600 check in their unemployment in this country bought a new iPhone. So there are going to be stocks that will explode. But right now, what you're seeing is a little bit of trouble pulling back, testing support lines. But unlike what we see 2 days ago, the test 2 days ago, the test today is showing that it's working. Let me see if I can make this circle a little larger here so we can look inside of it. Right now, the test is working because you bounce ball moving average, and you're getting back into the channel. So I like what I'm seeing today for Sunday night into Monday on the 3 charts we've seen so far. And that sort of takes care of our indices. But what I've noticed is there are other charts that are doing the same thing, reacting at resistance and support or trend line channels. For instance, let's look at what gold did this week. If you look at gold, and we looked at every one of these charts in our last week's roundup, by the way, this is just continuation of what we've seen last week. In the roundup last week, we talked about gold being at a triple top and then trying to get above and should get above that triple top. It absolutely did. The triple top is also part of a massive bull flag. Flagpole is all of these days going up. The big flat is your flag. And now we're developing a new channel in gold. You see it right here, the green channel? You can't deny that. That's a very strong looking channel, and gold has been respecting the top and bottom of that channel since it started moving higher from the low of the flag. So analysis all fits together in one pretty puzzle if you look at it properly. So what's happening now is, of course, you're going to get support test right here. There will be a test of that line on Sunday into Monday. If it's breached, you come down a little and probably head right back up, because not only is gold showing a big bull flag, which is bullish in the end, but the big bull flag, as I said, is part of a triple top, and an Oscarism view of a triple top, you get nothing more than a pullback. Triple tops, as far as I'm concerned, equal a pullback after the triple top and a rally above it. That's always what I tell people about triple tops. I've been saying this for 30 years. It is what happens with triple tops. Sometimes a triple top will actually top out a market. In most cases, a triple top will just beg for a pullback, like I just showed you, and then a rally above that top. That's how you should always look at playing triple tops, and only sometimes one of them will actually crash down and drop all the way back down to the bottom of the formation that created the triple top. So I like calling triple tops a pause level that will continue higher. That's exactly what gold did, and now inside of this wonderful channel. So gold for the week did just about everything. Had a few great trades this week in gold using the Omni method and the simple trend lines. So that's what our gold looks like. And I noticed another thing happening. Not a lot of people are paying attention to the grains. But when I've told you that the street, Wall Street, where I grew up, watches that 200-ball moving average like a hawk, watch this. I was doing some analysis during the week. I started to notice a few things in the grain markets. This I think you'll find interesting. It should be the grain chart. Look at this insanity, the way the street just pays attention to this 200-ball moving average. It gets breached in soybeans. Now, okay, so we looked at indices, which are involved in the stock market. Now, this is completely separate, opposite spectrum almost. This is a commodity that people need when they're hungry for products, for all sorts of things. It's soybeans. So it shouldn't act like the indices. However, when I tell you that the street watches the 200 ball moving average, look at this. Once it breaches here, it falls apart. Never gets back to it until one day, and look what happens after that one day, a total break. It immediately broke down after hitting that 200 ball moving average. I kid you not, this is what algorithms are made up of. They're not as tricky as you might think. Some of them are extremely complicated. Many of them are looking for the simplicity behind these charts. So the market gets slammed at the 200 ball moving average. So it seems to be one of the things that Wall Street will pay attention to. Soybeans, by the way, on the other side of it, has had a very nice run. Look at soybeans lately. Nice run from these lows all the way to the first test of the 200 ball moving average. And if you ask me, this could very well be a flag building right here. So I said, well, if that's soybeans, what else is doing that? And there are others. Watch this. Look at the wheat. Now, simple trend line analysis, which is what we keep speaking about. The market puts a high in, the trend line gets established here, so the rest of this line wouldn't exist, right? You go from here to here, and you have a trend line. Then, of course, we extend out. Well, look what happens the next time you get anywhere near that trend line. Look what happens here. Boom. Failure immediately at that trend line now that it's been established. Look what happens here. At the 200 bar and the trend line, and it just falls apart. The 200 moving average, the 200 ball moving average, and simple trend line analysis has been the flavor of the week. Traders all over the globe are paying attention to it, which means Wall Street is paying attention to this. But you see how well it worked? Look at how the 200 bar, when it gets above here, it works well. It holds again here. It holds again here. When it finally breaks, right? Look at this, comes down. Look what it does here. Stops cold, has another break. And look what it's doing right here. Now, the other thing I'll tell you is you knock on the door enough times in this industry, the door will open. So I'm looking at this as knock 3 times. And here's your first, you got all 3 of them already. Look, you got knock, knock, knock. You have one here, you have one here, and right here. So we just knocked on the 200 bar moving average door 3 times. Let me make that a little bigger so you can see what I wrote. So in my opinion, being that we're knocking on this door, not in my opinion, in my experience over my 39 years, if you knock on the door enough times, the door will open. So now that we're here, we're knocking on the door at the 200 and resistance, I think it moves higher. Even if it pulls back, I think this is showing us that wheat wants to move up, soybeans want to move up. So of course, then we go to look at why would that be? And there's a good reason for it. Look at this. This is what's starting to drive not just the gold, but your grain markets as well. Once again, simple resistance trend lines. Step said 101. Do this. You should be able to do this in this. So we have a trend line. Starts here, becomes established here. We know we have it now. Gets near it and fails all the way down, failed again here. Look what else has happened. You've got what's considered a support line through here, held well, made an apex or a pennant flag, broke underneath that pennant flag, and created a new support line. Held here, right? You can see what's going on. Held here, and finally got breached. Once again, when it breached, it stopped at the 200 ball moving average. This red resistance line broke through this support line. Dollar does not look good right here. Now a new channel towards the downside is forming, this blue one. So that dollar, being that grains are priced in dollars and so are metals, if the dollar continues to go lower, metals and grains will continue to go higher. In fact, one other chart, just because I'm thinking of it now, is copper. and that should be HGU at this point in time. Look at how well copper has done. Since the dollar has your copper market, it has literally gone crazy. Now, copper usually tells you, we used to call this Dr. Copper for as long as I've been in the business, up until about 10 years ago, we called this Dr. Copper. Because when copper went up, it told you that the economy was doing well. Why? Because you need copper to make cars, to make buildings, to make just about anything and everything you can think of. So when copper moved higher, we used to call it Dr. Copper. And look at how much higher it's moved. Let me dock it in this parallel channel for you. So this is absolutely going to make building materials cost more money, cars cost more money, everything electronic costs more money. But the dollar moving down is absolutely making metals move higher. Platinum, palladium, gold, and copper, as I'm showing you here. And you are getting through this parallel resistance line at the same time. So interesting how well trendline analysis has been the flavor of Wall Street lately. They are just all over this. I've got a very good mind for spotting what they're looking for because I grew up on Wall Street. So when I see things happen, I immediately say, well, I know what they're looking for. Let me investigate. And what I found recently is between channels, trend lines, and 200 bar moving averages, that is what they're paying attention to. And oddly enough, I think I've shown you in every video this week, they're paying attention to the 20 bar moving average on the NASDAQ, which is something that you wouldn't pay attention to unless this was your third day of analysis and you just got warmed up. And for whatever reason, the street has reverted back to the 20 bar moving average on that NASDAQ. I don't know if I had it on the NASDAQ chart. Let me see if I can find that for you. So NASDAQ chart, let's turn this. So I always try to look for what the street is looking at, and whatever they're looking at is what I want to be part of. They usually look at the 200 bar moving average, which everyone knows. Why would they be looking at this 20? I guess just because they see the NASDAQ holding it so well. Look at that insanity. Look at how many times this NASDAQ stops cold at this 20 bar moving average and the channel, by the way, and rallies out. Channel, average, rally. Hits the channel, hits the average, rally. Channel, average, just about hitting, rally. Breaches it, big rally. Breaches it, monster rally. So when I tell you that the street is paying attention to certain items, and if you spot them, you can trade the same way the street does. These are those simplistic items that they're looking for. If you'd like, just join me in my free trading room at livewithoscar.com. I look at stuff like this all day and night. When it's worth it, I bring it up to my trading room. I show them charts. But this is actually live with Oscar. I live here 24 hours a day, 6 days a week. I'm always in these rooms trading. So if you would like to do analysis of this nature, either come here, or I could hear Dano yelling at me right now for not doing this. So let me give you another one. Dano, are you yelling at me right now? You can also go here. It's called the omnibootcamp.com. And you can fill out an application there. And at omnibootcamp.com, we'll get all the information about you that we need, contact you back, and get you started with what we're doing here. Jeff, as you know, Jeff usually comes out, or Scott Brown will come out to my seminars here in Vegas, but COVID has basically shut them down on us. I've done one this year, maybe two. I've got another one planned for September, but I can only bring out half the crowd. No one's allowed to fly. The rules are insane. Corona has really done damage to all of us, right? I mean, everyone's seen that. And one of the things about this NASDAQ moving higher, I will tell you this, there's zero justification for these high prices except for the $9 trillion that's been put into the markets. Now, I analyze charts, and whatever the charts say, I believe, and that's that. But when you look at something like the amount of things not taking place in the country and the world right now, I'm going to use me for an example because this I know top day, and some of my Omniacs have been hearing me complaining about this in my trading room for the last 10, 15 days. I generally hold Omni camps. I invite people from around the world 3 to 4 times a year. I invite them to seminars in Las Vegas. It's a 5-day-long seminar. I send them home. They love what happens. Now, they have to spend money to come out here. They got to buy a plane ticket. They got to buy supplies. They got to show up in Vegas. I've got to buy them a computer. I buy them supplies. We chauffeur them around. We feed them. None of that is happening. None of it. Okay. So all of that, just in my instance, isn't taking place in the markets. I've got another thing that's been bothering me. One of my mastiffs, sorry to say, passed away a few weeks ago. For the past 20 years, whenever I lose a mastiff, we raise mastiffs here. We don't have puppies ever, but we buy puppies. If I make a phone call when a mastiff dies, because they die like every 10 years, I can literally get a dog like that. There's 20 breeders. They're all out there. They've all got puppies. They want to sell those puppies. So you've got to gas up the car. You got to go buy the puppy. You pay for the puppy. You vet bills. The people raising the puppies who created the puppies, they've got vet bills. I have been looking for weeks. No one is raising these dogs right now due to Corona. So that's another thing that should create a lot of money. I usually do videos at night. I stand in front of a camera. I talk for a while. I show you markets, and then I show a chart segment. My videographers, their mom has Corona. I can't do my videos at night. What does that cost? These are just small examples of what's happening to me. Take that, times it by everyone out there. All the big businesses that aren't doing the business they used to. Making new highs in the NASDAQ is not justified by the action or the amount of business happening right now. It is justified by the $9 trillion that was poured into the market. Once that wears off, if we don't have a cure, there is zero justification. Again, for instance, taking my situation. If my company was public, would you be wanting to buy it or sell it right now with all the things I just told you? I can't do videos. I'm not doing omnicams. Of course, you would want to sell that, right? Well, every one of these companies that aren't selling stuff, that aren't an Amazon type company, are in the same shape. Yet the stock market continues to move higher. So I will not doubt the market because the market's always right. But there's no justification unless we come up with a vaccine and get back to work for these high prices. Got to be careful towards the end of this year, kids. No vaccine. I am telling you now, be careful towards the end of this year. Jeff, now I open it up to you.
Oscar, I just want to say I would buy into your company, but I'd need a discount.
You got it, buddy.
What do you think? Do you have any opinions on oil? I was kind of curious to look at oil today, and I know you like to look at commodities.
Absolutely. So
and we have a few people talking about some symbols we might look at as well.
Okay, so I'll pull up oil for us right now. I believe we're doing August right now. So that's CLQ. So in your crude oil, obviously I was just looking at this not too long ago, wasn't I? Let's get rid of some stuff on here that we don't need for now. So crude oil falls out of what? What did I tell you? The street, Jeff, I'll bet you can answer this. What's the street been paying attention to lately? Right in front of your eyes.
The 200 or the 20?
Channels and the 200.
Parallel channels, okay.
They're just paying like crazy. Now look what they started to do to crude. It stayed in the parallel channel. And as soon as it got above that below that line of the parallel channel, can't get above, can't get above, can't get above, can't get above. Now it's starting a downturn. So I kid you not, the street really pays attention to this. What I think about crude is that the same thing I think coming, look here. So there's not a lot of people out on vacation and driving like there were last year, right?
Right.
Before Corona? Well, we were up here before Corona. That's where crude was before Corona. So I'd have to say, what do you think happens when we get to that 200 ball moving average next? Likelihood is if we even get there, you'll get the same sort of failure. Of course, everything I'm telling you about the possibility of downsides, because I'm usually bullish if the charts are, it's all based on us not getting some kind of a vaccine. A vaccine would just make this go crazy to the upside, crude. So without vaccine, kids, we've got a problem, right? Everything stays in slowdown mode. Now, they just announced as of today, starting today in Las Vegas or all of Nevada, we're going back to phase 1 in bars and restaurants. We're backing up. There's no justification for stocks to continue higher if states like Nevada are starting to go, well, we can't even bring people in anymore. You see what I'm saying? Without a cure, there is no justification for these high prices. They won't last forever. The $9 trillion will wear out at some point. And there's no need for crude to be up here right now. I mean, what's the need for crude to be up here?
There's a little bit of a disagreement in our YouTube chat right now that I want you to weigh in on.
Sure.
And that's whether or not Tesla is in a bubble.
I think Tesla will be lending money. I think Elon will be lending money to Jeff soon. Jeff Bezos. I mean, how do you stop what's going on? Realize what he did. While we were having trouble and blaming China, which it's absolutely their fault, on Corona, he made nice with them and opened up a factory. You know, we've got 350 billion people in this country. They've got 1.5 billion, 350 million in this country. They've got 1.5 billion in China. And Elon Musk made nice with China during the Corona shutdown. So his company moving higher, I mean, I'll pull it up. I don't think it stops. So ask anyone in the room. At 600, I made a projection of 1,200. We've actually gotten there. I didn't know when it would get there. Let's pull it up. So here's Tesla. Totally ridiculous market. Let's see if we can clean this up a little bit. Look at how insane. Now, I don't think it's fake. I don't think it's a bubble. I don't think there's anything wrong with it at all, to be honest with you. So I think Tesla looks really good. And of course, as you can see, it spent its time bouncing off of trend lines, which we can make this much nicer and tighter. We can go right here. This thing spent a lot of time building some momentum before it went, but each time it got to a trend line, it bounced off that spot and moved itself higher. And of course, this is some kind of a parallel channel. And I kid you not, when I tell you that the street watches you breaking out of a parallel channel, watch this. If I could just get that line to move. Oh, there we go. So when it finally starts to break out, look at that. Look at that major breakout. Now, there's no reason to put it there because the line is here and it hits there, right? Well, it looks fine the way it is. It's a well-placed trend line. It's really part of a parallel. And look what Tesla did once it got above this parallel channel. And I like Tesla. I think if it has a flaw, it's between 1,000 and 900. And can it go to 17, 18? Absolutely, positively. What did it do today? 1,500? My goodness. So I think it'll just continue. I would absolutely buy pullbacks. And even in a very small way, you made a channel on the way up. Look at this. Even in a very small channel, it's still maintained on the way up. So, you know, traders know what to look for. They're not stupid. They know how to spot this stuff. And that right there is a bull flag, and it broke out of the bull flag. And I have to say, I like Tesla. I think if there are any shorts left in this, God forbid, get out on the next dip, kids. Now, don't forget, all of this is based on everyone on the planet. Either we come up with a cure for Corona, or everyone's going to get sicker and nothing's going to go well anymore, right? So a lot of what's happening in the markets, you've got Corona built into algorithms, built into people's mindset. I mean, it's all over the charts, right? And there's nothing that we can do without thinking about it right now. But if you look at the difference between Tesla before it opened up its plant in China, which is right about here, and Tesla now, if you look at all of Tesla, before it opened up in China, it never looked as good as it does now. Let me see if I can get all of it. This was Tesla before it opened up its plant in China. And around here, if I remember my dates right, it opened up its plant in China, right around there. Right around December of this year. Didn't it open up last year?
I don't know.
Look at the insane, well, there are traders out there that would know this for sure. Look at the insane movement that's happened since.
That's insane. Yeah.
Yeah. There's nothing unreal. There's nothing not right with that chart. I mean, it looks pretty good.
Let's do, you have time for maybe two more?
Sure.
Let's do EEM.
EEM. Nasty. Jump around. It's got gaps everywhere. So this doesn't do a lot of volume, obviously.
Looks like it's an emerging market.
Emerging market. Oh, there you go. That makes perfect sense now. Look at how, what I would call this, my description for a chart like this, it's very herky-jerky, if you will.
Mm-hmm.
Just look at all the different gaps and all the different things it does, and it doesn't make any sense to me. So does it look nice? Well, if you can make all these bars look a little prettier, yeah, it's got a really nice look to it. And why? Well, simple part of it is, what direction is this bad boy going in right now? Right? You can take this line and put it on any side of this, it's been going up. So simply looking at that, it's been going up, and it established some room over that 200 bar moving average. So if I had to do simple analysis on this, I would tell you that emerging markets look decent. I wouldn't trade this chart. I just don't like the way it moves around. There's nothing wrong with the look of emerging markets. Now, you do realize when I tell you all of this fits together, do you know why emerging markets are going up like this? You can, if you take this spot right here, you'll see that's when the dollar topped out. The dollar's topped out.
Yeah, that makes sense.
Markets are moving up. I mean, it all works together in one symphony, technical analysis. All the markets, they're interactive, they're intraactive, so they're inter and intra markets. And if you want to look at one sector like this, you should look at the other sectors or the other reasons to see why it would be going. So I haven't even pulled a dollar chart, but I can tell you that dollar stopped going up right around here when this started going up. Dollar started going down. Because while the dollar was going down, emerging markets were getting hammered. As you can see, because dollar was going down up for a long time, emerging markets were getting hammered. Now while dollar's going down, emerging markets are going back up. So there is a reason for it, technically and fundamentally, but that's based on dollars. Their dollar's getting stronger against our dollar, so their stocks get better.
All right, Netflix.
Ah, that's a sick one. Let's open up Netflix. Or I believe I had that saved as. Yes, there it is. All right, so if you recall, we looked at this in last week's recap. We talked about it getting above this flat, well, it's more like a flag with a weird pole, so I just called it a parallel channel. And look what it did once it got above that parallel channel. So when it tries and it can't, gets back to the bottom. When it tried, only made it halfway, a little bit more than halfway to the bottom, and just exploded. But look what it did since it got above. It just took off. Now, this isn't an actual measurement, but just to give you some idea of how far it might go, and it's not an actual measurement, you can't count on this, but you can do something simple like this to at least give you some kind of measurement of where you should go when you break out. So the distance from the high and the low of the channel is basically the minimum how high you'd expect it to go. And that would have given you a projection minimum of here. But of course, it's not really how you would want to gauge this. But if you had no other way of figuring out where your target might be, at least do that. It'll help you figure out where it could go. Netflix looks fantastic. Once again, the same people that are home buying iPhones and shopping on Amazon are joining Netflix, right?
Do you have personally, do you own a Disney subscription? And
Do I
follow-up
own-
questions.
What's the question?
Do you have a Disney subscription?
I do not have Disney.
Oh, okay. All
We've
right.
got almost everything that the kids can purchase on my credit card, but
Right.
I look at the end of the month and I'm going, no one's watched half of this. Dear Lord, what is all of this? But I let it run. I mean, what am I going to do with the kids?
The last one.
I've got everything you think of. Not
Yeah,
this.
yeah. The follow-up was if you watched Hamilton on it yet, but so since
Well,
you've
you know,
had,
Hamilton? The play?
yeah, mhm.
I
Yeah.
haven't seen the movie. My daughter is absolutely enamored with it. She sings some of the songs and puts it out on Facebook and stuff like that. So I haven't seen it yet, but I am a fan.
Okay.
I've eaten dinner in their home in Manhattan, in a
I
restaurant.
just noticed that this
called By
Netflix
School.
knocked 3 times before it broke that channel.
Listen, guys, it's almost a lock when you get that. Knocked 3 times. So it's an Oscarism. You know, I use it when I need to. I don't know if you'll find that in the book unless I pen it because it's a little silly, but it's the way I see things when I watch these charts.
And then for Stefan, the last one I think we'll look at is silver.
Ooh, the world's dog. So let me tell you why I called it that.
I was curious.
I started in the business, and gold was $250. Copper was under a penny, 65 cents. Platinum was $300. I mean, $300, $350. Palladium was a little below that. Silver was about $16 to $19 in 1982 when I started. Gold has gone up to $2,000. Platinum's gone to $2,000. Copper is worth dollars now, not cents. Palladium, everything's gone through the roof. You know where silver is? In the same spot it was when I started. It is the world's dog. It just never goes anywhere. So
I think you pulled up the wrong one. This looks like Singapore.
SIUO should be so. Let's do it a different one. You can always count on this. That'll bring me silver. Okay? So again, when I started in the business, it traded 16, 13, 11, 9, 15, 17, and it just has been doing that for my entire career. So what I was taught by my mentor, Dominic Orciello, loved this man to death, taught me so much. When I started in the business, he said, hey kid, when silver sticks its ugly head up, take out your lawnmower and chop it off. It never goes anywhere. With that raspy voice. He's been right for 39 years. So the guy knew what he was talking about. So, all right, if you looked at silver, it's cheaper. Okay, silver was cheaper in March than it was in 1982 when I started. All right, it was about here when I started, right about here. So if you looked at gold, it wouldn't even fit on the chart anymore for how high it's gone. And copper and platinum and palladium, and silver just sits here. So there's too much of it on the planet. It's really not worth much. By the way, it's a byproduct of mining copper, if you didn't know that. So you get silver when you mine copper. And right now, it is absolutely starting to break out. Short term, in sympathy with gold, I like silver. I like gold. I like copper. I like all the metals. Why? You see the dollar analysis I showed you a few moments ago? Well, if silver's priced in dollars and dollars are going down, silver's got nowhere else to go but up. So shorter term, I like silver. I think that you can buy the pullbacks in silver and gold. However, longer term, there's only one thing silver ever does, and it goes back to where it started. Now, for 39 years, I've been watching it, and I'm able to tell you that that's absolutely true. So don't get your high hopes up, but look at what happened here. Same sort of trend line that S&P is getting above right now. This is your silver. Let me mark it for you. Let me just label this silver. So silver daily bar, make that a little bigger so we can all read it. All right, so we've got silver. And what I like about it is, now that I'll pull it back into focus, look at how it got above the major trend line resistance. So what makes that major? Well, if you look where it starts here, becomes established here. Now you have a trend line. You can extend it forward. Tries to get above, gets respected again here, gets respected again here on this red day. Then it finally, once it gets above, and it gets smartly above. Now I like what I see. Now that we're above this trend line, you can like it much more. So let's cut this away. So of course you'll run into a little bit of resistance up there, but don't forget this. You're going to have a double top soon, and that's probably when you got to sell silver, because it is a dog, and I am not telling you to get long silver and hold it. I'm an advocate of selling rallies in silver, big rallies. So here's going to likely be your next spot to want to sell silver, and that price comes in at 2002, somewhere near $20. So let's just mark that in case people are watching.
Richard wants to know if you can reach into your pocket and pull out a gold coin. A gold coin.
I reach into my pocket and pull out a gold coin. I don't know. Let's find out. Yeah, I can. I carry one wherever I go since I'm a kid. Well, since I started in the business. I keep a cougar in. Wait a minute, we're not done. See that gold market in front of your eyes? I keep one of those in my pocket too. Just in case. So I started in the silver and gold pits when I was 18 years old, and I keep one of these on me at all times. I always have.
GDX, Oscar. GDX.
GDX. Let's see. Was this the gold? Yeah, that's what I thought. So it's the gold miners ETF. And here's what I showed in last week's, if I did this last week, I showed that a small head and shoulders is merely a continuation pattern instead of a topping pattern, and the market will go higher. Last time I looked at this, that's the analysis I showed people, went to a bull flag and then into a parallel channel.
Cool.
How cool is that?
Last one, I promise. DIS.
D as in Disney?
Disney, yeah. DIS is in Disney.
How come people are still going there? Let's do this. Green, red. Let's make it look
I
a little
think
prettier.
Florida. I think Disney World opened up this week. If I read that right.
Yeah, I don't know how you can put crowds together with a bunch of kids and everyone stuffed on rides and all of that. It's like Vegas. How do you get them
even in Florida, right? In Florida.
Yeah.
Huh.
Yeah, in Florida. I don't think California that I know of. So we're looking at Disney. Let's just do some simple stuff, simple trend line analysis. Let's go across here. So we're going to go here and establish the trend line, and then we extend forward. So now we've got a trend line that we know we're going to run into at some point. And if you've seen it enough times in this video, which I'm sure you have, it will matter when you get there. Even if it gets above, you will stall there, like you've seen S&P do all week. Now it's getting above, but it's stalled there all week long in the S&P. This, of course, is Disney, so let's label it. And this is your daily bar. All right, so as you can see here, you're going to run into resistance, but at least you got this thing moving up for now. I really didn't expect Disney to be able to survive when it opened, but my expectations mean nothing because I'm an analyst. But I thought that they would have trouble right away. I'm glad to see at least it's moved up this high. And if you want to take this to a smaller, if you want to trade this on a daily, there is some kind of a channel here. Just trade the channel. When it gets to the high and lows of the channel, play that for now. Because with Corona, I mean, Disney is absolutely going to be one of those hit or miss. Will it stay open or will it get closed, you know? So personally, I'm a little worried about Disney for Disney. The stock itself, if you asked me to analyze this, I would tell you that looks very good to me. So let's not call it Disney. Let's look at that as a chart. I love what I see right there. There's nothing wrong with it.
We'll call it Walt instead.
So, and don't forget, I look for day trades. So for trading Sunday, Monday, I would like buying Disney. I don't know what I would say on Monday for Tuesday. That I would run my Omni at that point and come up with whatever analysis the Omni tells me.
All right. So
anything else? Would you like to look at anything else, sir?
I think we're looking good. I would like everybody to go and look at livewithoscar.com.
All right, so let me just get this crazy chart back up. Yes, because I want to show you that resistance one more time.
Okay.
So remember this one. This is the most important, in my opinion, this is the most important challenge we're having right now. If we can maintain levels above this red line in the E-mini S&P, and the red line basically is at today's highs. Look at today's highs and you'll see where I'm speaking about. If we can get and stay above that, new highs S&P will happen almost immediately. We just need to establish above there. Of course, you know, there will be traders that will be looking for this as a double top right here, right? Because you got these three highs at this blue line. So there'll be a little resistance here to test. So that blue line, I'm just going to show that to you as this top here. And then, of course, you're going to run into it when you get back up there. So keep that in mind. But getting above here, which I didn't expect, because if you look here, hit 1, hit 2, hit 3, breakdown. So we had hit 1, hit 2, hit 3, then it hit 4, started to break down, then it went right back up above as I blew this up for you earlier. That is promising. It's at least settled above on a Friday afternoon. So you got to like that. Now, you just mentioned livewithoscar.com. I had a window up to show you, but being that my computer went crazy, let me see if I can log into it somehow. And this browser is certainly not going to let me go there. Let me try another one. So oddly enough, that Metastock, me looking at you, Jeff, it's still flickering. I don't know what made that happen.
Really? That's interesting.
Yeah, it's still flickering. Let me see if I can live with Oscar very quickly. I don't know if it'll let me.
Okay, I have it up too. If you want to look at it on my screen.
Might have to because I'm not getting any window to pop up. I'm just trying to pull up a browser, but whatever happened to that blue screen of death before, I can't seem to get an internet browser up. Whatever.
Let's go ahead and do it here. So I am at livewithoscar.com. I see a whole bunch of handsome right here.
Oh, well, thank you.
All right. So livewithoscar.com. Is there anything in particular you'd like me to kind of show while we're up here?
Well, so basically when you get here, you could click on any of those menus and see a whole bunch of things that I've written for you to study from. But mainly what I'd expect you to do is just log in, either create a username or log in. So you see at the top right, you got login. The best thing for you to do is click that. You would immediately log in if you had a username, password. If not, just create one. We don't take credit cards or anything like that. We barely even ask for a phone number. We ask for just a few bits of information, and you can get right in. The idea, though, would be to join me in my live trading room. Jeff, do you have? Oh, there you go.
I don't have one, actually.
Oh, you don't know yours?
I don't have one. I don't have one. Well, I might have one. But I'm going to definitely set one up. I don't have one I can actually kind of log
you should join us. Well, we speak so often. We almost are in a trading room together.
Yeah. Livewithoscar.com, set up a free account. I was telling people before the break that they should go subscribe to your YouTube channels. I get them like popping up on my phone all the time. They're awesome, Oscar. I think you do such a great job with them.
Thank you so much. I really enjoy doing these videos for traders. And as you can see, I just love analysis. I've got such a passion for it. So I don't feel like I'm working when I do this. I feel like I'm having fun.
Awesome. Well, we'll let you get back to the pool.
Well, it didn't feel like fun today because we all lost trading. I still enjoyed the day, even though I got abused.
We appreciate you. That was great. You're great. Thanks for coming in. For everybody that's watching along at home, thanks for coming today. We do appreciate it. Hopefully we'll see you tomorrow at the session, and stay safe, stay healthy.
Well, thank you, Jeff, for inviting me. Thank you, everyone, for paying attention, and have a great weekend.